Hi, thanks for tuning in. This is the US Futures weekly chart analysis for the week ending 6th of February 2026. First chart is the US dollar index futures. They did close higher this week. Suggested last week that following this shakeout kind of bar, that the market would attempt to push higher, probably up to this level, which is what happened. The market did close slightly below that level, and it did remain just slightly above that bar's low. That was a holiday affected bar, so it's not as important as this bar, which I've got marked on the much higher volume. That's where the activity was. This is a fluffy low here, and one perhaps that's not as significant. But price has pushed up to the important level. It hasn't regained its position above that level, and it's closed just slightly below in the relative safety often found in the shadow of a line like that. And that's where the market has closed this week. I would expect the market will consolidate early in the week and just pull back slightly, sort of in there within the range of this week's bar, and just see how much supply continues to be drawn out. Supply is relatively low. There may be an attempt to push higher and perhaps challenge this line. And if supply continues to be drawn out, the market may pull back more deeply and back perhaps down to this level. Next chart is the E-mini S&P. This is S&P 500 index futures. They've effectively shaken out this week. A deep push lower and then a recovery. The low this week was below the previous down bar's low, and price has pushed up. I'm still a little concerned this market's gone nowhere for quite some time, just traded sideways in quite a narrow range. That being said, there's no immediate cause for concern. The market looks more positive than negative, but it is a concern overall if this market can't move out of that range. Volume increased this week as price pulled back and recovered. So this is like a shakeout bar. In response to that, you'll often get either a test for supply and then a push higher, and rarely will you get a test for supply over a whole week. So it would be a test for supply early in the week and then a response higher if supply is found to be low. That's the most likely response. A breakdown from there would be quite a serious display of weakness, because this market's inferring strength this week. It pulled back and then recovered to close pretty much adjacent to the previous 3 weeks close and above this line. So that's a little sign of strength there. It's inferring strength. You need to see it to confirm. And to see it, you would either see a direct push higher or a test for supply early in the week and then a push higher in response. See how we go. Next chart is the US Treasury 10-year note futures, and they had been just holding on grimly at this level. This week price did push higher in response. The close off the week's high suggests that supply continues to be drawn out, because we've had some weakness through here for some time. Price was in a position to break down here, but it didn't do so. It's held on pretty well, to be honest. But this week, when price has attempted to push higher, it's drawn out supply again, which is unsurprising. You've got this congestion to the left, which will contain supply. So it was always going to happen. I expect the market will test for supply early, below the previous bar's close, in here like this, probably with a narrow spread, and then respond depending on how much supply is actually drawn out of the market. This is copper price futures. Copper price futures had some serious weakness emerge in the previous week, up here, on very high volume. It was almost certainly going to trade lower for a period this week in an attempt to consolidate. And that's pretty much what's happened in here. Prices traded well below the previous bar's low and below that bar's low and that equilibrium level. So there was a pretty sharp pullback. Price has recovered pretty well to close almost adjacent to last week's close. The attempt to push higher during the week was met with supply, I would suggest, and that's why price has pulled back. You've got an equilibrium level forming in here. You note all these closes, 1, 2, 3, 4, 5, 6 closes, all in that narrow range. This is where there's a fair balance between buyers and sellers, and you'll note that it's just below and in the shadow of the highs of the range here. It was a pretty good effort this week, considering the inferred weakness that was displayed up here. There was some pretty serious selling pressure emerging. The market did pull back and recover pretty nicely. I would expect some testing for supply early next week, just sideways in here, like this. And then a response, depending on how much supply is drawn out. Supply continues to be drawn out, price will probably pull back a little more deeply. And if supply is not drawn out, there may be an attempt to push up towards the highs of the range. Gold price futures, similar to copper to some degree. There was pretty serious weakness displayed up here, and price was always going to push below the previous bar's close and attempt to consolidate in here, and that's what's happened. And then the market's recovered quite nicely to close up adjacent to that bar's high. That's a pretty strong move. Demand is strong in this market. You would have actually expected much more consolidation required in response to the weakness inferred on that bar. That was pretty high volume, and prices really only pulled back relatively briefly below that bar's close to consolidate, and then it's pushed higher again. There is good demand in this market, very strong demand in this market, and that's why the market's recovered very quickly. Now, you may see the market test for supply again at this level. That would be a logical expectation, especially early in the week. And if supply is found to be low, this market may attempt to continue higher. Silver price futures. Silver price futures traded both above and below the previous bar's close, almost like a panic cycle where the market trades considerably above and below the previous close. You don't see it a great deal. There was certainly weakness drawn out on last week's bar, and you would have expected for sure some testing for supply below last week's close. But a strong push back above last week's close, only to come back and close mid-bar. It does look a bit like a panic cycle where price trades both sides, substantially both sides of the previous close. That suggests there's real supply being drawn out and there's real demand in the market at the same time. And there's no consensus as to which side holds the upper hand. It'll be interesting to watch this market. I would suggest that it will test for supply early. This is what a logical market would do, a normal market. I do accept this market hasn't been trading normally for some time now, but you would expect normally in an orthodox market a test for supply early in the week, and then if supply is found to be low, an attempt to push higher, and if supply continues to be drawn out, a deeper pullback to challenge the sellers. That's the expectation. I'm not sure we'll exactly get that. This market's been very volatile more recently. Into the energy sector now. Energy sector's been quite strong more recently. This week, price pulled back within the range of the previous up bar, which is exactly what you would expect. Price did a good job here to push up to the highs of this range, and it's just pulled back in consolidation mode, traded within that range all week, closed about mid-bar on pretty strong volume, so it wasn't really a test for supply, or if it was an attempt to test for supply, way too much supply has been drawn out. The fact that there's a mid-bar close, however, suggests that there's sufficient demand in the market to absorb the supply that has been drawn out. That's allowed the market to close mid-bar. So this market's showing some strength now. It hasn't done so for quite some time. You can see there's a pressing nature down here towards the upside. Then last week, a push up to the highs of this next higher range, and this week, a consolidation bar that's closed mid-bar. There's more demand in this market than we've seen for some time. Similar to many of the other markets, the expectation in a normal market would be for a test for supply here early in the week, a little narrow spread down bar that recovers to close back mid-bar or near its highs and display lower volume than we've seen previously. And that would tell the market that supply is low and it's free to make an attempt to push higher. If supply is found to be drawn out, you'll probably find a deeper pullback to the next level, and that's down to here. And then the market would trade depending on what happened here later in the week. So depending on what happens later in the week, the market will then find a new equilibrium to close at. This is Monday next week and Tuesday, Wednesday here. Then you'll have Thursday and Friday, depending on how much supply is actually being drawn out of the market. Into the currencies now. This is the Euro-US dollar currency pair. There was weakness inferred 2 weeks ago when the US dollar recovered and put in like a shakeout bar. And we saw an upthrust bar in response here on pretty high volume. So the market was almost certainly going to pull back to some degree this week and attempt to consolidate. It did a pretty good job to not pull back to that level and remains comfortably within this zone here. That was a pretty good job, really. Volume reduced considerably. I'm expecting the US dollar to consolidate early in the week. That'll probably allow this market just to push up to the highs of the range here, like this. And then the price may come back to close at a similar level to this week. I don't think the US dollar is going to break down here. I'm not sure it's going to accelerate higher either. And that'll leave this market, the euro, trading roughly sideways for the week, probably slightly up and then back down. The British pound traded very similarly, as you would expect, to the euro, but with a little more volatility. You can see the wider spread, the same mid-bar close. There was supply drawn out the previous week, no doubt. The price was always going to come back and attempt to consolidate. That's what it did. It did pull back to the next lower level, where the euro didn't quite make it to that level. This market's a little more volatile than the euro at this point in time. But the same result has happened. The market has consolidated within the highs and the low of the previous zone. And I expect the market, similarly to the euro, will possibly push up to the highs of the range but not exceed it, and then come back to some degree and close roughly adjacent to this week's close. Japanese yen currency futures. They were always going to pull back this week, similarly to the previous two charts. There was pretty serious weakness inferred here on quite high volume. Prices pulled back this week as expected. It's actually closed just a fraction below the lows of the range. That might prove to be an overshoot. We'll just wait and see. You may see the market just recover back into that level next week. Volume suggests that supply wasn't particularly high this week. The lows of the range through there, they're like last gasp lows. That's where the market may head next week. If that wasn't an overshoot, I would expect the market to come back to this level or perhaps break down, because that's not actually very strong at all. On that low volume, you would have expected a narrower spread and the ability to close at the lows of the range here. And it hasn't done so. It's really threatening to break down, really, is what it's doing. Aussie dollar currency futures. They've been the strongest of the four currencies more recently and continued to be this week. Price actually closed as an up bar for the week, despite the US dollar also closing higher. This is fundamental strength from the local economy. There was a test for supply below the previous bar's close at some point during the week, and then a push higher probably later in the week and up to this next higher level. We saw strength starting to emerge back here, commented on it at the time, and since then we've seen a push higher, and close off its high when there was strength in the US dollar. And you would have expected the market to pull back this week as the US dollar continued higher, but it actually closes an up bar. That's a real sign of strength for this market. I'm not sure if there's enough strength at this point in time to break out above this level, but I would expect a test for supply early. Looks like many of the markets will do so. It'll pull back just below the previous bar's close. It'll attempt to recover. If volume is low, and especially if the US dollar has pulled back to consolidate, this market will attempt to break out a second time and push up to the next higher level, which I don't have marked yet, and I'll have to go and find it. But at this point, the market's just closed fractionally below the new highs of the range in here, and does look well placed to issue a challenge to that level if supply is found to be low. Bitcoin futures broke down this week. Pretty serious. It was obvious early in the week, if you were following this market, that price gapped below the previous close. Here's the lows of the range. Here's where the market closed last week, and price gapped below that, immediately inferring weakness. I was expecting the market to make an attempt to recover. But as soon as this market opened, it gapped down. It gapped below previous support. And then anyone who had bought in here was instantly a weak holder. They were in a losing position. And that leaves them vulnerable to being shaken out because they're holding at a loss. Volume was very high this week, and the mid-bar close does show that some demand emerged later in the week. Whether this proves to be a shakeout or whether there's an attempt to consolidate in here, it's too early to tell that at the moment. There was sufficient demand emerge to close almost mid-bar, but this was a deliberate action. This was a gap down below previous support, and that made all of the holders who opened positions in here weak holders, holding at a loss, vulnerable to the market gyrations. You've got previous support to the left through here, and that's kind of where the market has finished this week, within that zone. So that's unsurprising to a large degree. It's finished in here, and this is where previous support has been found in the background. I think there might be more to come in this market. I think at best the market will move roughly sideways in here and attempt to consolidate again. There was sufficient demand emerge this week. I'll just clear this up. There was sufficient demand this week to close well off the week's low on pretty high volume. So while there was certainly a push lower, and that was likely a deliberate action, the market has found some support down here. It's very unlikely the market will immediately recover like this. Much more likely the market continues lower or attempts to consolidate sideways. Just back to the US dollar index futures quickly. You can see the strength that was inferred 2 weeks ago here, and the response higher last week and up to the important level. I would expect some consolidation early next week. in here like this, and then a response depending on how much supply is drawn out. Okay, thanks for your time. Back again next week. See ya.